and it's getting slightly stronger, but nothing like what we're discussing now in terms of that happening. So very important things. I'll spend some time trying to figure this all out, but I just thought I'd point that out.
Tyler,
Yeah.
and everybody, I didn't see that it wasn't recording, just an FYI, but yay, we're only 13 minutes in, so now we're recording. Sorry, everybody who's watching this later. Holy crap. All right, that's good. I'm learning, sorry. Okay, hey, Mark, I have your question. If the existence of previous hyperwave pattern, is the existence of previous hyperwave patterns in Bitcoin since 2014 changes your view versus if there wasn't?
Yeah, it does. I probably wouldn't have agreed with my son in April of 2017 when he called me up and said, this looks like a hyperwave, because at that time we had just barely gotten above 1,000 in January and February and March of 2017. We had started a move up, but it was way too early to call it a hyperwave. The only reason I concluded it probably would become one was because of those previous moves back in 2012, 2013, and 2013, 2014, and 15, where we had these two mini hyperwaves that had big percentage gains, but weren't really full hyperwaves. And that led me to believe, because of some other examples I've seen of things that started small, like the Dow Jones Industrial Average, which ran from 1,000 up to 2,800 between 1982 and 1987. During that 5-year period, it really started to take off, and it began getting steeper and steeper. Now, that was actually coming from a $555 low all the way back in 1973 and 74. So if you take $500 up to 2,800, that's approximately a 5 and almost a 6 times 6x move, which has hyperwave qualities to it. And from that, I concluded that because we had the crash of 1987, where we dropped 22% in one day, that was a phase 5 of a hyperwave. And then after a run up in November and December of 1987, I assumed it was going to crash all the way back down to 1,000, but it didn't. It held, became a funky hyperwave, and then went from approximately $1,600 after the crash all the way up to 10,000. And now, after 2 more crashes, the first one going from 10,000 down to 6,000 in 0001, 02, 03, and then again from over 11,700 in 07 all the way back down to 6,000. We've now gone from 6,000 up to 28,000. So what I'm saying is, I've seen patterns before in which if you get these little hyperwaves on the beginning of a move that don't complete themselves all the way down, you can assume that there's the possibility, and maybe even high probability, of bigger and bigger hyperwaves coming. And that's exactly what I assumed last year with the Bitcoin market. When it got above 2,000 and then 3,000, I was convinced it was moving up into a phase 3 and then a phase 4. I just had no idea that it would all take place in, a 6-month period of time from late summer until December the 19th. So it was very, very compressed. until we started this move down after the December highs. And that's the other reason I believe that if we get back down to either the phase 2 line, which might hold, or the 1000, which will hold, that we'll start up again with even a bigger one.
Thanks. And a follow-up, did this or does this change your view on phase 2 holding?
No, it doesn't. The odds are still the same. They're only 1 in 5, but 1 in 5 is not horrible. I mean, it's not what you'd like. You'd rather have 4 in 5, 4 out of 5 chance that it's going to hold, but that's just not what history shows. History shows that very, very, very few, approximately 20% or 1 in 5 hyperwaves don't go all the way back down to the beginning. So that's got to be your starting place. You've just got to make that assumption that the probability is that it's not going to hold. But be prepared for it to hold, meaning assume that it's going to bounce off after breaking, and then close back above it, and then it'll do it a second time and a third time and a fourth time, just like on the phase 3 where we had 11 tests before it broke, but it still broke. And you don't want to get too excited by putting a lot of money in on a bounce off the phase 2 line. You can, if it gets far enough below the phase 2 line, you can put a little bit of money in. If you've got a 1 in 5 chance, then put 20% of X in on that sharp break. Let's say it goes down to 4,500 or 4,400, and it looks like capitulation and all of that sort of thing. Then put a little bit of money into it on the long side, assuming it's going to get back up to 5,500 at least. You can pick up $1,000 on a bounce, but don't hold that for very long because it's going to come back down and test it again.
Lost your mic again.
How's it? Anything?
You're good.
Jeez. So that's, everything is probability. And you don't want to put more money in than the probability is suggesting to you. So that's, it does not, everything I've just said does not change any of the statistics.
Thanks, Ty. What do you think would event or need, for lack of a better word, needs to happen to throw Bitcoin into a funky hyperwave?
Well, events aren't going to do it. It's the accumulation of all fundamentals. And there's so many that you can't pinpoint 1 or 2 or 5. What you do is you assume that it could happen. And you prepare yourself that it could happen. Could happen means that phase 2 line could hold and then go into a funky hyperwave, which means it doesn't break. It might get tested 1, 2, 3, 4, 5, 10 times, but it doesn't break. Now, what that means is that the old 3, 4, 5, 6, and 7 weren't really there. That the phase 2 that started all the way back in 2017, April of 2017, is still intact. We know that the phase 3 line that we thought was there disappeared when it was broken. But if the phase 2 line does not break, that means that original phase 2 line is still there. So if we move up from that, we are moving up in a new phase 3. And we can forget about the fact that the 3 and the 4 from last year, 2017, in the late summer and fall and early winter of 2017, was just a movement, a price movement above phase 2. because by coming down in price through all of those, we've negated them. But by not getting back below the phase two, that says that phase two is still real. That means that if that occurs this month or next month, then we are in the phase two of an enormous hyperwave in which the price has already gone up to 20,000 above where we are now at about 5,500. So phase two could go on for a long period of time, or it could turn into a phase three by accelerating up away from the phase two line. That becomes the new phase three line, which would probably go way above 20,000, maybe 40 or 50,000 on a phase three line. And that phase three line could go on for a year or 2 years or 3 years before it accelerates up into a phase four. So all you're doing, we're talking about a fractal here, where the original fractals were back in 2013, 14, and 15. And the ones that Tone keeps pointing to, the last one, looks so similar to what we're in right now that you've got to think in terms of fractals that keep getting bigger and bigger exponentially. So the implication of holding phase two, which is the question, is what would it take for this to become funky? Funky simply means that it doesn't go all the way back to the beginning, which is 1,000 or lower, that it's able to hold one of the old phase lines, either the 2 or the 3. We didn't do the 3. I assume probability-wise we're not going to do the 2. But if we do the 2, then my explanation I just gave is the way to look at it, that we are at the beginning of a very enormous hyperwave. Now, the old fractal, before the one we are in now, this one has run from 1,000 to 20,000, or 20 times. The one before it that Tone keeps referring to ran up to a little over 1,000, but it had started back, and pick your number of where the bottom or the beginning of that fractal was. It was well under 100, but even if you say it's 50, let's call that a 20x move from a much lower base. So this one, you would assume would be a 20x approximate move from a base where the phase two is at 5,500. That gets you up to $100,000 pretty quickly. So I'm a big believer. Again, I will tell the three of you that are on this, but anybody that listens in the future, it's important to look at Robert Prechter's book, Beautiful Pictures, that you can buy on Amazon, that all it is charts of the Dow or the S&P going all the way back close to 100 years, back in the 1920s, even before, from an Elliott point of view. And you'll see all the Fibonacci relationships, you'll see all the fractals over a long time period. There's just no way to ignore that that's a real thing. Bitcoin hasn't been around long enough to get that kind of perspective, but it's been around long enough that we've already seen 2 or 3, and we could, if this one holds and doesn't break down completely, go into a 4th. So,
have you looked at phase 5 and 6 retracement fib levels across different hyperwaves? I was thinking lowest risk way to trade as phase 1 through 4 fully confirmed beforehand?
Yeah, that's a great point. I've glanced at it. And for me, glancing means looking at it a lot, but for a short period of time over a short number of examples. But that really needs to be studied. That's one of the things that I hope we can start doing in our research group. And it will definitely be something that if my son's company, very possible, can ramp up this AI machine learning examination of hyperwaves, will be a big part of it, because I assume that that's going to reap a lot of rewards. It's going to teach us a lot. So that's a great question. Unfortunately, I don't have a great answer. I've seen some pretty interesting things with phase changes and Fibonacci lines, but it needs a much more in-depth examination.
Thanks, Ty. Until I get your question, Elias, I'm going to ask one to you. Tyler, yesterday's morning brief, were you able to catch it, or the article about Bishop warning the SEC?
Yeah.
Okay. So just an overview, right? Or like Brian Bishop sent this warning to the SEC, more specifically about, practices employed by the ICE. Just kind of as an overview, what did you think about what he said? Do you agree with it? And I can even recap some of the points and you can answer them specifically.
No, that's okay. Yeah, I read it carefully a bunch of times and I really thought about it. Basically what he's saying, he's one of the core developers, and he's saying, SEC, be careful on this ICE project. The whole thing about backed, BAKKT, and the coding of the original Bitcoin and the blockchain that continues on by the core developers is written in such a way, he is arguing, that allowing centralization of the assets being held in a place like in an exchange, like the ICE, will actually hurt what the developers have been working on for 10 years. And I don't believe there's anyone at the SEC that has the ability to understand what he's talking about. So I think it's more interesting for people in our space that have some idea what he's talking about, that he is pleading with the regulators not to allow the expansion of other things through regulated exchanges without really considering getting a panel, a group of core developers to sit with them. And if it takes an hour or a day or a week or a month for someone in the regulatory bodies to have some level of expertise in what he's saying. So I think that is all very interesting. Most people in the ecosystem, the crypto ecosystem, want this to expand and expand and expand on all kinds of exchanges, regulated, unregulated, all of that. And he's saying, if you kill the golden goose, which is Bitcoin, and the original Bitcoin blockchain that the core developers have been working on, then everything else is going to fail, which we've all been talking about and maximalists talk about in other ways. But he's talking about it very practically in terms of this thing is getting out of hand in terms of the number of exchanges and ETFs that are being submitted to the regulators. And he's saying, please go very, very slowly, because if you trip up here, all the work that we've done could be for naught. So it's a great article, but very difficult, I think, for most people to grasp, and certainly the regulators.
That makes sense. Question: if the price does the price size affect the hyperwave? As an example, it seems easier for Bitcoin to go to 100 from $1 rather than 10,000 to 100,000.
Yeah, absolutely. That's true with anything, not just Bitcoin. That's why so many people play penny stocks or stocks less than $1, because it doesn't. The reason prices are very low at the beginning is because no one's using them. And by definition, what causes price to go up is more and more usage, more and more people coming in, more and more liquidity, because more and more money is coming in. In the Bitcoin world, it's called cap size, that when the capitalization gets bigger and bigger and bigger, it takes a huge amount of money, the delta of the money that needs to come in to move the price a certain number of percentages, keeps getting more and more difficult. So yes, one of the reasons all hyperwaves fail at some point, meaning go from a 4 to a 5, is it reaches that limit. Every company, every stock, no stock has ever gone up to infinity. And even things that are S-curves stop going up. They start going sideways at the top of the S, because of the just limitations of what that question assumes, which is as prices go higher and higher, it takes a larger and larger portion of total wealth to move it any further. And by definition, there's a finite amount of total wealth, and total wealth will never go into one thing. A large portion of it can move from something else into it, but it's still finite. And that's why there's always an upper limit on all these things.
Thanks, Ty. And guys, I think we only have this one last question, unless you throw one quickly in, but Ty has to jump on a client call. So last one. Thank you, Daniel. Will the next financial crisis have a magnitude like that in the 1930s? And what is the best way to protect your wealth in such a situation?
Yeah, it's a very easy question. It doesn't sound like it is, but it is. And it's completely intuitive. 06, 07, 08 was worse than the stock market crash of 1929. The difference was that the policies after the stock market crash and the liberal policies that allowed the stock market crash were handled exactly in the wrong way that caused the Great Depression. The stock market crash did not cause the Great Depression, just as the dot-com crash did not cause a Great Depression. 06, 07, 08 had all of the elements that would have been much, much worse than the Great Depression, much worse. But it was handled either accidentally or because it was the only option by central banks in the only way possible that kept it from turning into an economic disaster. It was horrible, and people lost a lot of money in real estate and in the stock market, but it didn't last because of what central banks did. So the question is, will the next one be on the same level as the Great Depression, yes, it will. And the only way to protect wealth is to do the things we've been talking about on all of our hyperwave logs. You must be prepared to get out of anything you are in when the trend begins to change. And the best place to be in a Great Depression, in 07, 08, or 09, or in what's to come is in cash. You definitely don't want to be in assets because asset prices are dropping. You don't make any money if you're in cash, but that cash, because asset prices are dropping, gets more and more valuable every single day you hold it. Now, with some of that cash, the correct thing to do is make money on falling prices, either through inverse funds or through puts or through shorting financial futures. So those are three things. The single most important thing is get out of assets. Don't be in real estate. Don't be in stocks. Don't be in illiquid assets, number one. Number two, get out of liquid assets. Number three, be in cash while everything is falling in value except your cash. Your cash is getting worth more and more. And for those that are confident enough, actually take some of that cash and benefit by the falling prices by making money as they fall. And those are very simple things. Emotionally and intellectually very difficult for 99% of investors because you've been taught not to do those things by Wall Street and by people that I think have been giving very bad advice for a very long time. But they're very simple to do. You just have to be aware that it's beginning to happen. You've got to be prepared for it, and you've got to act. And you can do all of that in a day. It doesn't take months and months and months. You can do it instantaneously if you've set everything up properly and you're waiting for it.
Great. Oh, were you still talking? Sorry, Ty.
Nope.
Great. Last question. You have time. Thanks, Mark. I noticed gold and silver prices diverged recently. Silver up, gold up, during US dollar up. A bit contrary to Saifedean's view on silver. It's only a couple of weeks, but seems normally in sync. Any ideas or on why or tips on how to invest in gold and silver?
Yeah, I disagree with Tone and Saifedean about the split between silver and gold. I think they will continue to move together. Which one falls further in a down market over a short period of time is anybody's guess.
Mark meant gold down, but yes, keep going.
Yeah, and nothing significant is happening there. There are little tiny divergences, but there always are. But in general, they're moving together, and they are moving inversely to the dollar over a couple of days or even a couple of weeks or even a couple of months. All three of them can go in different directions or move together. But in general, the basic concept is there. If what I said about gold is true and it's got the potential of breaking down here and going all the way down to 300 or 400 bucks, silver is going to go down to $2 or even lower. Right now, I think if you use 800 as a reasonable target for gold, I think you're looking at silver at $6, approximately $6 or $7. And if gold and silver begin moving up here, they'll move up approximately together, just the way they did several years ago when gold got up to 1900 and silver got up over 40. The movements were about the same. So I just disagree with the premise that, and I'll throw platinum and palladium in there also, even though they're very different in various ways, very rarely do you get for many months or years a divergence in absolute direction of any of the four of those precious metals. And that also means that they don't diverge very much from general commodity prices. And a lot of people correlate the price of silver very closely to some of the grain prices. They tend to move together because they're all moving, having to do with either weakness or strength in the dollar or weakness in the strength of inflation. So it's much more complex than just gold and silver in terms of being part of a standard for many, many years. There's many other things that play into that.
Thanks, Ty. All right, we actually have 5 more minutes. So, blanket question. What has been exciting you most recently?
Everything. I mean, Leah and I started our vlogs by talking about this is the most spectacular year in the most spectacular decade in the most spectacular century ever in history. And every morning I wake up, I continue to believe that. There's just so much going on to be excited about, not only technologically, but governments changing, the spread of democracy over a 20-year period worldwide, the breaking down of borders around the world. We get lost in the fog of this daily nonsense that people get fixated on without looking at the big picture. Advancements in healthcare and medicine and everything is just accelerating exponentially. And some of those things bump into each other. But in general, this is just the most unbelievable time to be alive and observing things and understanding or trying to understand what's going on. Specifically, Bitcoin is right up there with me at the top of the list. It's only been around for 10 years, but it has the potential of changing everything. And it has the potential of failing. But all these major things fall into that same category. So, I'm very excited about the potential for the U.S. stock market and the U.S. economy to blow everybody's minds in the next 1, 2, 5, 10 years. But that might not happen because politically, things could happen that bring it all back down into mediocrity. And that's true all around the world. The best thing for Europe would be for would be for the European Union to break apart. And that's what the story of Bitcoin really is break apart institutions and groups and groupthink and higher powers and centralized powers that supposedly know more than each individual knows, which is nonsense, and get back to individual responsibility. Making your own decisions, taking control of your own life, learning what you need to do and how to do it, and not listening, to not going along with the crowd. That's what this great experiment is. It started 200 and some years ago in terms of politics with the formation of this country. It started with the Industrial Revolution. It started with the spread of democracy and the breaking down of borders. It started with the technological advances, starting with the chips and more in Intel. And all of this stuff gives power back to the individual. And Bitcoin is the crowning jewel in that movement, because it's actually a spiritual, metaphysical, moral, ethical movement that says each person's consciousness is the ultimate power, and we must take responsibility for it. And the only way to do that is to cut all these other ties. So what could be more exciting than that?
Thanks, Ty. That's great. I guess with 5 more. Oh, so Tone just joined. So I'm gonna.
Oh, great. Hey, Tone.
So he's in our Hyperwave group. So I am going to put you on the spot here. What do you disagree with most regarding you and Tone's thoughts and theories?
Oh, wow. Thanks. I've got a client meeting in 60 seconds. No, what is frightening to me is how two people as different as Tone and I are, how our thinking is so similar about so many things, coming from totally different viewpoints. We keep coming to the same conclusions, not using the same thought processes or the same technical processes or anything else. So in general, I've come to think of Tone as kind of like my my Siamese twin joined at the hips. Having said that, we differ on a number of little things that some people interpret as being big things. I see manipulation everywhere. Tone sees manipulation nowhere. We agree on almost everything having to do with the ecosystem and altcoins and anything having to do with the structure of this movement. We disagree about little things about, I think one of the biggest problems in this ecosystem are the developers and the programmers. All of this nonsense that has come out over the last 10 years has come from that group of people. It hasn't come from the promoters. The promoters come up with wild ideas to make money, but they've got to pay somebody to write the code. And that's this group called developers and programmers. And I don't think Tone looks at it that way. I know Jimmy doesn't, but I do. Because the white hats become gray hats, become black hats, and then they start talking like they're white hats again. And you can't tell one from the other. So anyway, that's just a general thing. We disagree tremendously about buying and holding Bitcoin. And Tone's got a lot of very good reasons why he does it the way he does, because of the position he's in and how he's defining his life. To me, the overriding thing in anything where you take money and put it into something is always looking when you're going to take the money out of that something. And to me, that's whenever the trend changes, regardless of what it is. If it's Bitcoin or if it's gold, I'm a huge gold bug, but I went for 20 years not owning any gold. I'm a huge Bitcoin bug, but now for 9 months, I haven't owned any Bitcoin. So that's a difference, but there's explanations for why and how. Other than that, politically, almost every way, I'm just very pleased that I ran across Tone and have learned so much from him.
Yay! Thanks. All right, Ty. You have client meeting in 7. Everybody, thank you so much, Hyperwavers. Thanks for helping us. Tone says thank you. Tyler, want to sign off?
Yep. Thank you all very much for helping us. We'll work out all the little bugs so that when we do our webinar, it'll be perfect or close to perfect.
I'll definitely try my best. Thanks, guys, for being guinea pigs. All right. Bye.